There is absolutely nothing like knowing millionaire status is just inevitable. That is, of course, as long as I continue to double down on my investment strategy, which simply calls for loading up on high-quality stocks week in and week out. Now, as for this past week, I actually sold out of a position within my Roth IRA to reallocate the capital elsewhere, thus doubling down on 3 other positions of mine. All that and more to cover today. So with that, let's dive right in. So the first order of business here is just sharing that there were 2 pieces of news from this past week which triggered the investor inside of me to act accordingly. And by that, I just mean take some immediate action. The first tidbit of news I'm going to cover now, but I'm going to go into greater detail about in tomorrow's video, so just make sure you're actually subscribed so you don't miss any macros. But essentially, we had some pretty favorable news when it came down to inflation cooling down, which is going to set us up well now come September for hopefully a Federal Reserve rate cut. Now that tidbit of news fueled me to take immediate action in replenishing my settlement fund with another 10 grand. But if I'm being honest, that was actually all on my agenda either way, simply because I always want to have a lot of dry powder on the sidelines to invest when the opportunities like the big sell-off that happened a couple weeks back come around. And because it actually pays dividends to literally just park your money in a settlement fund, well, at least it does with Vanguard, which outbeats all the bank interest rates any day, well, I have a lot of money in my settlement fund. Now, as for the second piece of news, Starbucks just ousted their CEO and replaced him with Brian Nicole, a chief executive who is over at Chipotle. But we're going to circle back to that news in just a second. Portfolio-wise, as we speak, popping open Gitcoin, my portfolio tracker, we can see that my account is now hovering around $191,500, all after a couple weeks worth of volatility and uncertainty, to which I took full advantage of. And now I'm estimating about a month or 2 before I cross that $200,000 milestone in my brokerage account. Now, I'm going to circle back to Gitcoin in a hot second and do a deeper portfolio dive with you just after I share all the investment moves that I made this past week, and we'll use Gitcoin to actually see how my portfolio configuration has changed from all of my decisions. But let's now cover my first move this past week, which revolved all around Starbucks, ticker symbol SBUX, just after that big announcement of Chipotle's Brian Nicole joining the Starbucks team. Now, is that significant news? Absolutely. And did it need to happen? 110%. And after the announcement, we can see that the stock actually popped up from $75 or so per share to $95 plus per share, which made for a 22% launch, ultimately recovering all the losses on the year already. But here's where it gets really interesting, at least to me. Clicking into the 10-year, we could see an overall 189% worth of share price appreciation and multiple dips throughout its history, just given it all deals in consumer trend shifts. Now, Starbucks has a phenomenal product in terms of reputation. That reputation that they built and the sheer size of Starbucks, both domestically and globally, well, I just don't foresee this coffee leader fading out anytime soon. However, I think Starbucks just has a lot of work to do in order for a successful turnaround story to come about, which is why I think even analysts are saying that the stock is actually overvalued and ultimately projecting downside of about 8%. In addition, we could see that hedge funds, at least as of last quarter, have been selling a lot of their shares worth of Starbucks, and I think everyone's really just awaiting to see how this new head frappuccino is actually going to turn Starbucks around for the better. Now, my fingers are certainly crossed all for the best, because while I do still hold some shares, I actually sold out of 16 shares that I had in my IRA to put roughly $1,500 back into my pocket to reinvest elsewhere. I'm not here to say that Starbucks is a bad investment, so don't get me wrong, I'm long on it. I am, however, sharing that Starbucks is not a stock in focus for me based on my personal needs and long-term outlook, which is where I feel that I'm going to need some more focus on right now, that long-term vision for growth. Of course, I still hold 8 shares outside of my IRA, so I'm going to enjoy the dividends from Starbucks thanks to that yield still coming in at 2.43%, which continues to boast an average of 17% growth rate and a 13-year track record worth of dividends. Now, after selling Starbucks, like I said, I went ahead to reallocate that capital elsewhere. In terms of doing so, my immediate go-to was Amazon, ticker symbol AMZN, which I know I don't really need to introduce to you all, as it's the e-commerce giant that you likely use on a monthly, weekly, or for some of you even daily basis. But I do want you to really take note of the fact that 41% of the United States e-commerce market is is actually Amazon's. And most importantly, their Amazon Web Services just continues to grow in the shadows, while advertising services, get this, has seen over 22% year-over-year growth. So being future-oriented before consumers get back to splurging on whatever they desire, I wanted to take advantage of Amazon's recent dip, whereas it is currently trading for $170 per share after sliding from nearly $200 per share back in July. It's still up on the year by 11%, and on the decade, we could see a powerhouse worth of appreciation, having soared by over 914%. Now, this is not a dividend stock, obviously, but the value is there, and as I seek to marry more growth opportunities with dividend stocks in my portfolio, this was an opportunity to score 3 more shares for $503.73, bring my share count up to 23 shares worth of Amazon. And looking forward into the stock's performance here over the long term, as I foresee plenty of appreciation, analysts are right there with me with over 32% worth of appreciation expected, hitting $225.47 per share, while Amazon is likely just to continue to decrease that share value and doing so internally as well, buying more shares back in June. But of course, I didn't stop with just Amazon. I took the time to continue to pour even more money here into Alphabet, ticker symbol GOOGL, a position I'm highly focused on, which as you can see right now is the opportune time to buy the stock as it remains down in the red over the last 3 months by nearly 7%, trading for $160 or so per share, but still up overall in the year by 14%. And of course, you can see a sheer growth juggernaut here with over 437% worth of appreciation over the last decade. Now, all the recent news around Google has kept it in the red, from a federal judge ruling against Google in the DOJ antitrust suit over default searches on smartphone web browsers, and Google's global search actually on the decline. But keep this all in mind here. Google is the largest search engine in the world. Its name is literally a verb, to Google something. And Alphabet owns YouTube, the second largest search platform in the world, which, in my opinion, just makes it well positioned to do very well in the future. Now, once interest rate cuts actually come our way, I think a lot of businesses will up the ante on their advertising on Google, and that revenue is going to flow in. So you have my thesis there. 3 more shares were bought for $491.40. That brings my total share count up to 121 total shares worth of Google. I'm long on it, very bullish. Analysts are the same, with over 27% worth of upside coming Google's way, at least expected, to $204.50 per share, all while Google continues to boost its value with its share buyback program, the largest yet, back in June. And then, of course, my weekly purchase of the entire S&P, to which I'll never lose with this strategy, buying more shares worth of Vanguard's S&P ETF, ticker symbol VOO, which I bought just 1 more share of for $495.08. That brings my share count up to 16 total shares of VOO. With all of those updates, let's pop back open GitQuinn here to actually get the latest in terms of my allocation. Now, you can see that I remain heavily invested into individual stocks, roughly 50% worth of my portfolio, and then I get into a much safer position with all of my ETFs at 26.39% worth of all my capital, all of which are broader based ETFs, so I don't have to worry much and can certainly sleep well at night, before mutual funds come in around 15% worth of my portfolio's weight, and a Warren Buffett-like position, whereas I just keep on adding more and more cash, which is right now just around $14,000, or almost 8% worth of the weight in my portfolio, which all further breaks down into technology that is just over 48% worth of my investments, and that's because of my age, risk tolerance, and timeline. Whereas I am really after just total return at the end of the day, on top of dividend distributions, before I tap into healthcare for some more safety there at 13%, consumer discretionary at 10.4%, and spreading thinner and thinner into other sectors. Now, position-wise, most of my might comes from my initial Vanguard position, my investment foundation, the Vanguard Total Stock Market Index Fund, ticker symbol VTSAX. That's 15.3% worth of my portfolio. Then we have Apple at about 13% of my portfolio. From there, I have another 12% Vanguard Total Stock Market Fund, that's ticker symbol VTI. And happy to share that Google has now become a serious player in my portfolio at roughly 10% of the weight, before I get into Vanguard's Technology Fund, ticker symbol VGT, at 9.9%, and then some safety with Johnson & Johnson at 8.46% for the cash position comes in, and into a bunch of other holdings of mine. But I do want you to take note of the fact that I have a fair amount in my funds and 2 leading tech players, those players being Apple and Google, as I am convinced our technology era has really only just begun. Either way, that's the portfolio for you as of this video, my latest update here. Comment down below your weekly update, any purchases that you made, or if you made any sells. Drop all the comments down below. Be sure to check out this video for more insights, and definitely make sure you're subscribed before you actually click away, and I'll catch you all in the next one.